We are live with Steve. Oh, now I'm hesitating. Saretsky. How do I pronounce it?
Boom. You nailed it.
Oh, yeah. Okay.
Saretsky.
Steve Saretsky.
Yeah.
Okay. And Nicholas Alexander Karadza, my little brothers here, as I mentioned. Nick, I love saying that. Sorry.
I know.
Steve, I didn't ask
it
before we start.
It probably doesn't get old for other people, just for me.
Yeah, just for you. Yeah, Steve's hearing this. I know I'm a funny guy, dude. So this is good. Steve, I didn't ask before we started. You're from the West Coast. Are you? I'm hoping you're a Leafs fan, though. Are you a Leafs fan?
No, but I'm not a Canucks fan either.
What are you, Flames?
No, I'm a big Colorado Avalanche fan. I grew up as a kid watching Joe Sakic, and Joe Sakic grew up 20 minutes from where I grew up. So Burnaby Joe, as we called him, he was my idol, and I've followed them ever since. So.
Okay, that's a lot. I thought you were going to be a bandwagon jumper on Colorado. That's a lot.
Man.
That seems like a legit story. So you're allowed.
I was there for the 48-point season like 5 years ago. That was tough.
Yeah. Well, hey, I'm going to the Leafs game tonight, and I don't know, jerseys might be thrown on the ice tonight. So I'm 49 years old, and I've been suffering I think I've been suffering since I was in the womb. I've been suffering 50 years. Anyway, Steve, it's a pleasure having you here. You share some of the content that I think Nick and I resonate the most with when it comes to real estate. You seem to have a kind of combination of real estate commentary on the Canadian market and then the market where you are in, but also on kind of global macroeconomic stuff. I just wanted to ask before we get into some of the details, where does that come from? How are you able to comment on the real estate market, but also at a higher level on interest rates, M2, what's going on globally? Where does that kind of knowledge base come from?
Honestly, man, it's just like self-taught. I mean, everyone's like, this guy's not an economist. I was like, no, I'm not an economist. I don't really want to be. I don't want a PhD. I just like to learn. I like to always try to improve myself. Just honestly, I spent a lot of money on subscription services over the years, Real Vision, listen to people like Jeff Booth, Lynn Alden, podcasting, reading books. And I'm just passionate about it. I like it. I really find the whole, global finance, it's kind of like a massive chess game, right? Like you're trying to figure out how all the pieces are going to move and what the next play is. And I think it really matters to figure out our like housing market even, right? Like the Vancouver housing market, for example, and GTA is the same. It's like, we're impacted by global capital flows from around the world. In 2015, 16, we had China devalue the yuan. All that money came gushing into Canada. And it's like trying to understand how those capital flows work. And obviously now we're seeing like the power of interest rates and central banks and how they can manipulate, currencies. And I just find the whole game so fascinating. So I've just been trying to be a student really of markets and trying to figure out how I can use that information to try to educate my clients.
And then for a lot of our audience isn't going to be familiar with the Vancouver market. What's the latest right now? So we're recording this. I feel like I need to say this because tomorrow could be totally different, but we're very early in November, 2022, as we're recording this. What's the current state of the Vancouver market right now?
It's really weak. I don't think it's as bad as the GTA based on kind of what I'm hearing and seeing from other people, but we're depending on the month. Like, so for October, we had the fewest number of home sales since October 2008. Obviously that was just like a month after Bear Stearns collapsed. So, and then the next weakest month would have been like October of 2000. So we're like, depending on how you want to splice the data for the last, 3, 4, 5 months, we've pretty much been running at like 10 to 20 year lows in terms of sales volume. So very, very weak. The problem is we don't have a ton of inventory right now. Sellers are definitely digging their heels in. But prices are down. I'm in the inner city here, near the downtown core. Prices are down, maybe about 10%. But if you go out into the pandemic stuff, into the suburbs where we had all that froth, I think there's a portion of the society that's more vulnerable to interest rates because it's more blue collar. They're much more sensitive to these interest rate movements. We've seen detached houses in parts of these markets down an easy 30%. So the correction is definitely widespread, but it's definitely more concentrated in some of these other areas that were, I think, frothy due to pandemic factors.
I'm curious, does that matter the type of house in those areas? Because we're seeing a big difference between the the starter home in some of the areas outside of Toronto, the starter home category versus like higher priced homes. So in Oakville, for example, something that was selling at $2.5 million has been greatly impacted versus something that's a little bit further out. There was a starter home that was selling at 700 now. It's not down nearly as much as on a percentage basis as the higher price home. Like that move up house to us is where we're seeing things really sit in that impact kind of hit, not the starter home category.
Interesting. I would almost argue that the starter home stuff, like in the suburbs, has been hit like the hardest.
And what price point is that for you when you mentioned that?
Oh gosh, I mean, like those areas are so far out that I don't service them. But I
Okay.
mean, I could tell you, like, these houses were going for like 1.2 at the peak, for example. This would be like Chilliwack. I'm just giving you a rough example. 1.2, they're now selling for like 750, 800.
Wow.
Oh wow. Okay.
So like
yeah.
they've had some huge movements, and like, yeah, we've seen townhouses in the suburbs like going from like 1.1 now selling for like 850. So like, there's been some pretty big movements in some of those pockets. But like I said, the inner city stuff, which is interesting because like in 2015, 2016, when we had all that foreign money that came in and boosted the market, a lot of that capital actually went to the higher end market. So luxury homes in West Vancouver, luxury homes on the west side of Vancouver. When we went through a correction in 2017 and into 18, some of those markets dropped 25, 30 to 35%.
Wow.
But this time around, like they're not really impacted that much because this last 2.5 years hasn't been driven by, foreign capital flows. It's been driven by like cheap money.
Yeah.
Locals being like, Bank of Canada's like, hey, go bore your brains out. We're going to keep rates at zero for, end of 2023 or whatever. And everyone's just like, oh my God, great. I can borrow a mortgage at 1.3%. And they took it.
Jeez. Holy smokes. That's interesting. That's different across different pockets of the
I don't
country.
think we've had the same. We've definitely had the foreign capital come in. I just don't think we had the same level of influx that like we didn't see at that earlier time frame when there was a lot of kind of Chinese or Asian money or foreign capital going to Vancouver. We weren't seeing the same influx here at that time because you guys had that huge run up way before Toronto. You guys were ahead of us in this area doing that type of stuff. So it's just it's a slightly different.
I feel like we got the spillover like a couple years later. It was kind of like Vancouver was tapped out, and then they're like, "Oh, there's this place called Toronto."
I think we had that foreign buyers tax come out in like August.
That's right.
August of 2016, and then I think you guys had like some residual from that. But yeah, definitely. Like I think our market's also smaller too. So when like a bunch of that money starts flowing over, like there's only so much real estate in this city. It's a pretty small city in the grand scheme of things, and yeah, it had a pretty big influence.
Okay, I didn't think I was going to ask you to get your crystal ball out so early because I want to ask you just how you got into this a little bit and some other things. But when we look back at the data, so Steve, you don't know this, but our family almost lost everything in the real estate crash of 1990 to 96 here in the GTA. Our father was flipping properties. You could do no wrong in the late 80s. 1990 hits. It was absolutely devastating. Interest rates went up 3% in 30 days. And a house that our family had purchased to flip for $750,000 in Mississauga went down to about $450,000. We were only guessing to $450,000 in about 4-month span. Like it just went straight down. So that was really devastating. We were renting it out, losing about $1,000 a month, trying to just survive because we couldn't kind of hand it back and take that kind of loss. And prices went down for 6 years. But when we look at the data on the real estate transaction, it's really interesting. Real estate transactions were only down for 1 year. And what happened is if I reflect back on just some of my father's friends at that time, I was about 17 years old. People just kept thinking things were going to get worse. So people started selling. And so prices kept coming down as more inventory kept coming on the market, but prices actually, just went down for 6 years. I'm not sure I see a 6-year thing here just because of the global debt situation and, inability to keep rates maybe as high as they currently are. If you had to kind of rub the crystal ball, where do you think the spring market is? And I don't know if you want to comment on Canada or Vancouver, however you want to comment on it, where do you think we are in the spring market? And I know this is just like, none of us know, but if you just had to guess, where do you think we are?
I mean, my personal opinion, I suppose, is I think that the next 6 to 12 months, I think, are going to be challenging. So I think we're going to see a slow grind lower in pricing. I think we saw this initial like flash crash, which was like people got stuck with two properties in, February, March, April. A lot of them, there was definitely some forced selling. The prices gapped down pretty quick. I think now we're seeing people digging in their heels. Prices are sort of firming up a little bit. But I still think like rates at these levels are simply too high for our high levered housing markets, right? I just don't think the GTA and Vancouver are designed to withstand, 5.5%, 6% mortgage rates. So I think as long as rates hold, I think they do for at least a little while. I think the spring market's going to see slightly lower prices. And then I will carry on. I don't know. Like it's hard for me obviously to predict. I think I think there's an element of probability because everyone's like waiting for like this pivot and then like it's back to like bull market. But like maybe we don't have a bull market for like 2, 3, maybe 4 years, right? Like maybe we just muddle through for like 24 months. And because you're saying, hey, it was it took six years to get back. Like maybe we go through like a 3-year soft patch here. That's like to me is a possibility. I think ultimately, rates. I personally think rates are going to come down. I don't think they're going to come back down to pandemic lows, but everyone's talking about like recession. Bank of Canada's already come out and admitted like we're going to basically engineer a recession here. And so, in my opinion, I think bond yields come lower, so fixed rate mortgages come off a little bit. But again, even if they only come from 5.5% on your mortgage rate back down to like 4.5%, I still think 4.5% is too high. It's just like the numbers just don't work that well. Not only for investors but for families. So that will be the question. I still think I think basically my sort of larger view is housing is really, really quite weak, 20-year lows in Vancouver, 20-year lows in the GTA, that policymakers are a step behind. I think they're going to over tighten as they always do. And I think that we're going to endure some pain and ultimately they're going to have to pivot, but that pivot will probably come later than what they probably should be doing.
From following you, I feel like you're a pretty opinionated guy, which I like. What do you feel like you never tell people about housing that you want to say? Like, is there stuff that you don't say?
Oh man. Okay. Yeah. Okay. That's a good one.
I just feel like you just have enough opinions that I'm like, shit, Steve's like, there's other stuff here. He, if you'd let this guy loose, he's going to bark some good shit. So like, is there stuff that just is on your mind, whether it's about, for your anything with the real estate market?
I've got a good one. You guys probably heard this because we were talking about it like before we started recording, which is like how the real estate industry kind of works. And there's like these like ingrained sort of beliefs that we're all sort of told when you get your real estate license, which is like real estate only goes up. And like, you buy it and like, the average rate of return, it will go up, whatever, 5 to 8% a year. And it's like, well, man, we've just had like prices like literally like in some of these markets doubled in the last like 4 or 5 years. Like people just love to extrapolate. And I'm like, what if you keep extrapolating, 7% a year, whatever, like at some point, like, your average price per square foot for a condo in the city is going to be like, $2,000 come like 2028
next year.
Yeah. And it's just like, to me, it's just like, I don't know, like, can we really, that's why I was saying to you guys, like, maybe there's a possibility where if we go through like a flat market for like 5 years, right? Like, so I think the notion is like, you get a lot of like home buyers or sellers even like, well, the market always goes up. And like, it's hard to go, like, you never want to push back on that because you're like, okay, like, I don't want to sound like the crazy person that thinks maybe it doesn't always go up.
We had just on that note, Nick, I think you know the story I'm going to mention. We had one, if he's probably going to listen to this. We had one client of ours buy a property and he was going to sell it. And at that time, we were appreciating properties. We were telling people like, kind of be like 4.5%. This was like 2008. We're like, maybe appreciate the property like 4.5% a year to come out with a price that you might sell. If you're going to extrapolate forward and look ahead 3 years, maybe 4%, maybe even 3.5%. And he figured that he would sell it in 3 years. Nick, do you remember? And he used 7 or 7.5%. And we're like, whoa, like you're not going to get a bank up. If you think you're going to get that reappraised at that time, like you're never going to do it. Doesn't the Burlington market appreciate like 7.5% a year for 3 years? And he looks at us and he's like, I'm pretty sure I should be teaching the classes, guys. And we're like, and so to your point, it's like, how do you tell, there's been such a long history now of like appreciation. When you tell people, hey, averages are kind of misleading and, you need to kind of look at things and be a little careful with your investments. And we always preach about cash flow, that your portfolio, if you're having investment real estate, it should cash flow, because if you're just buying in the hopes of appreciation, our family got caught that way. Don't be us, buy for cash flow so that you can survive. But it has been hard because, like you said, if someone says that to you, it's hard to be like the downer that's like, hey, you know what?
Cool your jets.
Yeah, exactly.
I think I actually had a friend of mine, nice guy, but like, he calls me one day. And so there's an area in Vancouver, just outside of like Vancouver, 20 minutes from the core. It's a nice area. It's up and coming. Anyways, they're building all these like new shiny towers because it's, the new spot to be. And so he's like, hey, I work for the developer and we're doing our, this is Tower 4 that they're launching. And I was like, he's like, should I buy one? I got the friends and family. They're letting me have first access to it. I'm like, oh, maybe, like, what's the price? And he's like, well, they're asking about $1,500 a square foot. I'm like, oh my God, man. Like the stuff, like the brand new stuff that they just completed that's on the resale market is like $1,200 a foot. So I was like, they're asking $1,500 a foot. And I was like, so you got to sell this thing when it completes. It's like, he wants to flip it. And I was like, so you're going to wait like 4 years, hope it goes up, and you got to flip it for like 1,700 to make some money. I was like, 1,700, man. Like those are some huge numbers. He goes, yeah, but remember when Tower 1 pre-sold like 6 years ago and like they were going for like 700 a foot. And I was like, yeah, but you can't just like keep extrapolating. Like he goes from 700 a foot to 1,800 a foot. I mean, like the numbers simply don't make sense. Like, anyways, it's I don't know. It was just amazing. And this is obviously a guy that was like heavily involved in the real estate development community. Yeah. But like just everybody just extrapolates into infinity.
Yeah, there is a natural glass ceiling based on incomes. Like it just, it has to, like where we are now, it feels like, I was just looking at like the long-term trend line and we overshot completely. Like we just spiked so hard. It was ridiculous, and for exactly kind of some of the stuff you look at is just the irresponsible, monetary policy that we had in this country caused this kind of just this spike in prices. And now we're almost back. This is a Canadian chart. It was from BMO, I guess, last month or a couple months ago. We're almost back in line with kind of the long-term trend, right? So we'll see, it might dip below and then kind of go, whatever the case may be. But I think it's like, what people don't get is like, we need like a slow and steady market is like that's what we want. That's like a sustainable market. These like price increases, that things are just going like this, and like it's gonna keep going up. It's just they never last. Like look in Alberta when that was happening, when oil was booming there. Look at you guys when that was happening before with all the only international money coming in.
The only thing that doesn't, and I agree obviously with all of this, but the only thing that to me that's in the back of my mind, I'm like, shit, like is there enough debt in the world now where maybe a liberal government comes out in a few years to say, or any government, I'm not picking on one party, but that says, hey, to save the first-time buyer in Canada, we'll just go to 40, 50-year amortizations. And they kind of have to go there because they need more money growth in the system. So part of me, although I'm agreeing with what we're all saying here, but part of me in the back of my mind, I can't help. There's this bit of this voice that's like, are we entering this weird era that, yes, it might be slow for 2 or 3 years, but is the response to a slow 2 or 3 years so much liquidity that flushes into the system in all different ways? One of them being extending amortizations in the name of saving the first-time home buyer and making housing affordable to them, even though that's going to give them debt for the rest of their lives. Does that the price response?
We're already going there.
You think so?
I think so. I mean, that's like, it kind of like, yeah, it's again, it's funny as I sell real estate. It kind of almost makes you a little bit like sick, but like it's where we're going. I think like, we saw Australia has been talking about it, which is they're going to provide like 20% of the down payment or something. Like we've already got
yeah, that's right. I forgot.
We've already got equity programs in Canada, right? Where you put down 5%, the government matches 5%, and now you got 10% down payment kind of thing.
And that's
there-
what I think makes it. Oh, go ahead, Nick. Sorry.
No, I was going to say there's private companies coming out and doing that as well, whereas they're putting that down part of the down payment and they're taking part ownership in the property. And they're, different terms, with different things. So you're starting to see it. And Tom, that's where I was going to go. I was going with my question because I think I got my daughter's little hairband she gave me here. This is my financial tool, but this is this. I was going to that point because I'm like, I think after this stuff shakes out, because they can't do it now. Politically, they can't do it now. So there is this natural glass ceiling, but then they have to do something because politically unless people come to terms with like, hey, you're not going to own a home, right? Politically, they're going to want to encourage home ownership because it's a good thing to run on from an election platform. That's when that type of message or that type of program comes out, or they expand these things, Steve, that they're doing now with these equity programs or whatever, because you see the private sector already coming in, right? The private sector is already coming in to do it. And if the government feels like there's an opportunity there for them to do whatever, because they want more control over everything all the time, it seems like anyways, they're going to kind of step in and do their approach to it.
I think the goalposts are just always moving, right? Like we saw during the onset of the pandemic, right? Like defer your mortgage, don't pay your mortgage for 6 months. Like anyone is like, well, yeah, it was a pandemic, they had to do that. But it's like, if you had even brought up that idea like pre-pandemic, people would be like, there's no way that would ever happen in a downturn that they would do that. And so I think by all intents and purposes, that program was the way it was intended to do. I think it was actually successful in its own metrics, which was, it actually did prevent a downturn, did prevent mass foreclosures. I think we've had 40-year amortizations in the past. There's no reason to think like those can't come back. One of the craziest things, my good buddy there, I don't know if you follow him on Twitter, Ben Rabideau, tweeted. Yesterday, the federal government announced that they're increasing their immigration targets, right? So by 20,
we're all over that. Yeah. Yeah.
You're right. So it's like, well, you want to talk about trying to maintain the existing system and boost house prices. They're talking about 500,000 new immigrants by 2025. So Ben tweets, he goes, I had a federal MP, member of parliament, telling me via DM that, quote, high immigration supporting house prices was one key consideration in today's announcement. Right. So it's like,
did they consider hospitals and roads in that announcement? Because it feels like they never considered that stuff. You know what I mean? Like we're already at this breaking point around here. I'm like, where are these people going to come from? I'm not anti-immigration. I think we have a good immigration system here, points-based. I like kind of what we're doing and stuff, but there's just got to be a little bit more forethought into this thing. Like it seems outrageous to be arbitrarily pick these numbers.
And on top of that, Nick, I don't know if Steve, did you know Mike Moffat? He puts out a bunch of population reports specifically around Ontario. Some of his reports are interesting because he was commenting on, and we had him on the podcast. We were talking about how the universities in Ontario, and I guess it's right across the country, they are granting student permits. What is a non-permanent student visa? What's the right language I'm using for? Anyway, foreign students who are coming into Canada, and none of that is considered. Like there's no reporting requirement for the universities across Ontario, and I assume it's right across Canada. Since 2015, Nick, you know the actual number, but the amount of foreign students in Canada has increased at an exponential rate, and none of that is being reported, but they all need rental properties. And so
they don't count as the 500,000 or whatever.
No, they don't count. No, the 500,000 you're seeing, it does not include, and someone might correct us if we're wrong, but I believe we're like 100% accurate on this.
It doesn't include that, but some of the non-permanent residents, because they've changed the programs, some of the non-permanent residents then shift over to permanent. So some of the people that are already here as a non-permanent, they then might be included in the permanent resident status afterwards if they get full citizenship or residency, or however it works. So there's not always. So what we're seeing now is there was this huge influx in non-permanent residents, and you're seeing that influx actually continue to increase, but slow. So that's not going to make up this huge extra chunk of people coming in. But it hasn't been recorded anyway. Like it's just not planned for at all.
Not that it's not being recorded. The municipal, provincial, and federal government levels don't ask for the number.
Yeah.
So if University of Toronto, Western, Queens, all these universities in Ontario dramatically increase the foreign student body, there's nobody asking about that. And that puts tremendous demand on rental properties in each of those communities. So it's just another variable. I'm not saying this is like a gotcha for the government. I just mean it's just another variable that puts demand on the housing here. That's not really, it's kind of like not reported, not discussed.
The schools are dictating part of our immigration policy and a huge part of the immigration policy. Like the school, these private corporations with no conversations, that we know of with the government, they're dictating these numbers. And it's why you're seeing a lot of these schools pop up, at least around in our area. Steve, I don't know if you have these. It's like these one-off kind of international college things with all these random programs, because that's how they're get these recruiters in foreign countries to recruit to their schools. They give them to pay high commissions, and they get them into these programs that aren't really well-suited programs. In a lot of cases, some cases they might be, but and then people are stuck here in something they didn't anticipate.
Yeah, no, I've heard about that. I mean, kind of always comes back to like you guys had Jeff Booth on the show, right? Which is like, yeah, it's just the reality is like that's how these economic systems are built, right? Like more people, more growth, more credit growth, maintain the system, and you're kind of on this, ultimately you're on this unsustainable path, but there's no way to get off, right? You have to keep maintaining it. And I don't know, yeah, I just talked about this on an interview like this week, which was like, the reality is like every politician is making policy decisions in order to get reelected. They're looking out for their best interests, and nobody wants the housing bubble to blow up on their watch, right? So everybody just kind of keeps maintaining it and kicking it off to the next guy. So I just think like, we look at immigration being at 500,000 people. Well, like where are we going to house these people? Like we've already got like a housing crisis. Yeah, prices are coming off right now, but like look at the rental market. It's a disaster. So we've still got this housing crisis, and what's happening right now, I mean, you guys probably see it in your area, but like, every developer right now is basically hitting pause on their new launches because the resale, pre-sale market's crap. The risk reward to launch a massive, 30-story concrete tower is not worth it. Your financing costs are through the roof. Your construction costs haven't really come down that much. So nobody's launching projects. And so you're going to have, like, I think you're going to see more shortages of housing supply, not this year, not next year, but, 4 or 5 years down the road when all these projects that should have launched today aren't available in 4 or 5 years. So I don't know. And that's maybe you're more, if you're looking at from a longer term, like you're looking for that bullish narrative. I would say that's, I was actually at a housing conference. I was supposed to do this interview with you guys last time I was in Toronto. And so they interviewed one of the speakers at this event was John Love at Kingset Capital. For anyone that's not familiar with Kingset, they're like one of the largest financiers of new development projects in Canada. They also own like shopping malls, buildings, hotels. This guy's a billionaire. So he's self-made billionaire in Canada, really smart guy. And he goes, listen, like his summary was like, listen, the next like 1 to 2 years, the Bank of Canada is going to crash the market. They are going to overstep their boundaries. So interest rates are going to dominate the picture. But he's like, over a 5+ year window period, he's like, it's a slam dunk because we're going to keep pulling in 400,000 or 500,000 people a year. And there's no coordination at the provincial, municipal, and federal level to get enough housing built. So he's like, this is a layup. And those are his words. And I think it was quite true. There's no solution to fix the problem.
What is the rental market this year? Like you mentioned that earlier. So because a lot of what we've seen here, demand gets removed from the resale market, or primarily resale. It just moves into the rental market because we've seen rents jump by, I don't know, maybe 20% or something this year. I mean, it depends on the area and some things will call it between 15 and 20, but it's been like strong moves, right? Have you guys seen the same type of thing over there?
Yeah, same thing. Like, yeah, 15, at least 15%.
Yeah.
Yeah, it's been crazy everywhere, man. I've got some rental properties myself in like Calgary, and just the rents over there, they were flat and stagnant for years, man. And they had a huge jump over the last 12 to 18 months. Pretty crazy over there.
And is that where, if investors were listening to this and are like, hey, Steve, I want to buy in Vancouver, is that where you're kind of directing some of your investor clients? Calgary? Is that your spot right now?
Just a different play, right? I mean, like you guys talked on the show here about like cash flow, and that's where you encourage your clients. Like it's really hard to get like meaningful cash flow in Vancouver. It's just like the prices are really high and the rents don't generate a whole lot. And so you're kind of definitely making more of a bet on appreciation. So Calgary's definitely a different play where like you are getting cash flow. The rental restrictions for that matter are very lenient. So there's no rent controls. So your variable rate mortgage goes up this year because the Bank of Canada raises rates and your mortgage payment's up, $500 a month. You can hypothetically pick up the phone, give your tenant, a couple months notice, and say, hey buddy, your rent's going up $400. My mortgage is up. I got to pass those costs on to you. Sorry.
And you think the Calgary market that can be absorbed in the market? That does happen.
Apparently, I mean, obviously it's always to an extent, right?
Sure,
Do I think you're able to pass the whole thing? No, but like if I look in Vancouver, like for the last 3 years, we've basically been capped at like 1.5 to 2% per year. And I've got people calling me and saying, hey, my mortgage is up $500-600 a month. My variable, like, and I can't change the rents at all. Raising them 2% on, $2,000 isn't moving the needle.
Are there pockets of the greater Vancouver area? If someone was listening and they're like, well, I just want something in that area, that you do direct people to, even if it's like negative cash flow, just because maybe you think medium, long term, this is a place to buy. Could you call out some of those pockets? Or
yeah, I mean, where I live and do most of my business, right? I mean, like we're in like the best grade A real estate, which is like, okay, you buy a 1-bedroom condo for $600,000 and we rent it out for $2,400 a month. But you're getting like a tier 1 quality tenant that's, medical professional or whatever, like, really, really good tenants. And I would say like the best real estate in Vancouver anyways, which is like prime inner city,
So that's the downtown core.
Downtown core. I mean, I would say like one of the popular ones, like Olympic Village, which was built in 2010 for the Olympics. Kitsilano, which is like prime west side neighborhood, like just really, really nice areas where like you're never gonna have a vacancy. I mean, it's like sub 1%. Rents are going up every year kind of thing. So that's kind of what we direct them to. But like the reality is like if you're going to those markets, like if you put 20% down today, like, oh man, like it's gonna be tough to break even. So you're realistically looking at like putting 25-30% down and just sitting on it.
Steve, how did you get into how are you in this place? How did you get into real estate? You finish school, you go right into real estate. We were talking, I can't remember if we already mentioned it, but you got you do a great job on YouTube. You're really active on Twitter. You have a great following. How did you get here? What's the journey?
I played a lot of hockey growing up, played like some fairly competitive hockey, and then
you can brag. Hey, you could tell us.
No, I wasn't like anything like to write home about. I just like, so I guess it's like one league below like the Ontario Hockey League, basically, or WHL, whatever you want to call it. So it'd be like one league below that. So a lot of guys, like a lot of people that I played with they would play in that league because you could get scholarships to American like NCAA schools. And so that was kind of like the path that I was trying to go down. Ended up getting to like some crappy school in Canada. In BC, did like a year of business there, had a whole bunch of concussion problems.
I like how you don't. Oh, did you?
Yeah.
I like you said crappy, but you don't name the school name. That's probably smart.
Oh yeah, it was a bad school. I pretty much I didn't go for the schooling. I went for the hockey.
Yeah. But then you hit some concussions. Is that what happened?
Yeah, I just had a bunch of concussions over the years, and I was like, I got to stop. I can't be playing like competitive physical hockey anymore. And like it was kind of the end of the road for my like career, anyways. So. Yeah, just from there, basically, I was like, well, what am I going to do next? And I was like, I hated school, man. I love, it's funny now because like I love to learn. I'll pick up,
obviously,
I'll go to the bookstore. Like that's my weekend. Go to the bookstore, pick up a book, read it, like pay for like subscriptions to read new, you know what I mean? And then I just hated school. And so I was like, well, why don't I get into real estate? I loved like Rich Dad, Poor Dad, like everybody else. My mom was actually a realtor at the time in like a suburban market. And I was like, well, she's doing pretty well. Like, like, why don't I try this? And like, I really liked real estate. I loved running. I've always been passionate about like owning and running a business. Cool. And I was like, the fact that I get to like be my own boss, that seems kind of cool. So anyways, just kind of got into that. And a couple of years in, started a real estate blog, which kind of got popular in like 2016 because like we had this like boom and the media was picking up all these stories. And then just from there, man, just kind of kept growing. Like every year the business got a little bit bigger, a little bit more successful. And here we
How
are.
did you get comfortable? A lot of people want to go into business for themselves, but then they're not comfortable either writing blog posts or going in front of a camera like you do with your YouTube videos. How did you get comfortable writing?
Yeah,
Was that forced?
Yeah, it was forced. What's funny is everybody's like, because I was like getting picked up in the media. And I mean, to be fair, I probably, I was like 2 or 3 years into the industry. So like, should I have been in like the media in the early days? I don't know. Probably not.
But you probably had an opinion.
Yeah,
Getting to know you now.
I had opinion, and I knew where to go. Like people think like, oh, I remember because I like, read comments online. People would be like, oh, this guy's got contacts in the media. Like maybe his family's helping him out. And I was like, I don't know anybody, but I was like, everything's intentional, right? Like I did study. I did like read books and like study people and like how to get into the media. Like how do you get like picked up, right? So like I started like getting on Twitter, started going on Reddit, like getting in forums, and then obviously creating a blog, because there wasn't a whole lot of people in Vancouver doing it, and that's kind of how it started like snowballing from there.
And then what about in front of the camera? How are you able to, because we have a bunch of clients that we talk to about just their own business development and stuff. How did you get comfortable in front of the camera doing the YouTube stuff?
I was terrible, man. I started in like, maybe 26. I think I left all my original videos up because I wanted people to like, if you want to go back and look and see where I started, like go scroll. Just trial and error. I think it was literally just trial and error. I think once you become better at your craft, like once you really know in depth like your topic, it just becomes like second nature. Whereas like I think when you're first like starting, you're trying to get the script right, you're trying to remember all the stats, you don't really exude, I think, a lot of confidence. And the funny thing is like I did one video a week on YouTube every single Saturday for about a year and a half, and I got like zero business, like no results, 25 views a video. And then it was slowly after that, right? Like the thing is, I think what most people do is they start something and they give up after 3-4 months. Oh, it didn't work. Well, it's like, no, you got to do it for,
That's funny you say that timeline, because we tell everyone a year and a half of nothing. Do something for a year and a half, expect nothing, and expect just to suffer for a year and a half. So yeah,
I'm amazed that you're on Twitter as much as you are, because Twitter is like just this, like it's like you earn the right to go on other media and to get picked up by the media if you're willing to go on Twitter and deal with the amount of crap that goes on there. Because that's not easy, especially in the way like the real estate over the last few years, man. It's polarizing, because if you say like what you were sharing before, we're like, hey, like long term, there are still, because we believe the same thing here. There's still some kind of fundamentals long term that could support the housing market here, right? But we're not like real estate only goes up, or it's the be all and end all. You got to buy a property now. Like that's
it's easy, it's passive. Yeah.
But
all the things we read in Rich Dad Poor Dad, by the way, which I loved. I should defend the book. That book was great. Yeah.
But you even come out saying anything even remotely like, that it's not overvalued by 1,000,000% and it should all go to $50 a property and stuff like that. Like, and people are on you. So if you I don't even know how you deal with that. That's an area that I just stay out of. I'm not gonna. I like it, for different stats and research myself. So that's one area, unfortunately, I give far more. I take far more than I give, because I'm not getting involved in this crap.
Yeah, I mean, I agree with you. I mean, I think it's just something that you get, like you build up like a thick skin over time, where you're like, listen, like, I don't know. One of the things I always looked at was like, you think about like the most successful people like that you maybe admire in like business or real estate or what have you, that are out there in social media. And I see it, and then I read like people just dunking on these people, like, this guy's a fraudster, like idiot, got his predictions wrong. I'm like, man, this guy's so successful. He's like spending all his like time and goodwill to like try to help other people, and like people are still dunking on him in the comments. So I was like, if that's happening to like other people that I admire, like, you just have to accept that like that's just like part of the game, basically.
Good perspective. How about your time? I didn't prep you for any of this, so I appreciate you answering these. Your time management. You obviously get a lot done. You do a lot in real estate. You do a lot online. I don't know your family situation. How are you managing your time? Is that like a set schedule where you're like, you mentioned every Saturday. So do you still do things like Twitter, I could imagine, is like on and off whenever you can jump on and off. But are there some things we've just allocated that happens at that day and that time, or no? Is it just more kind of off the cuff?
Yeah, I'm definitely like pretty regimented. I think like you have to be, I think in business, like, but, so yeah, like I have like a content schedule now, like, which is, okay, so like the video, my weekly YouTube video gets published every Saturday morning at 9 a.m. Like it just goes out. It's like a TV show. People know to tune in, and then when it's late, people let you know it's late. So it goes out at 9 a.m. on every Saturday. I always film those like, Friday afternoons. So I always make sure to have some time in my calendar where like, hey, I'm going to spend an hour and a half recording this video. And then, like my Monday morning newsletter, it goes out every Monday morning. It goes out at 5 a.m. Pacific time. And so that always gets written on Sundays. And then, and now we just added our Looney Hour podcast, which is kind of like more macroeconomics, but that always gets recorded every Thursday morning at 8:30 in the morning and goes out every Friday. So the content schedule is pretty regimented, and then I pretty much work my days in around those, because those for me are like non-negotiables. Like that, those pillars of content are really what not only drive my business, but they're driving and building my brand, which is from a larger, bigger term perspective, is extremely important for me, because I think once you have brand, and people know you, trust you, I think like you can build other businesses off of that.
That's interesting that you got to that point where you convinced yourself that those are non-negotiable. How was that? Just through all the different like teaching, all the books that you went to the bookstore and read about marketing and business building? Because most people don't get to that point where those things are non-negotiable.
Yeah, I mean, I think it also comes down to like what your aspirations are. Like if you're like, I don't really care about like building like a following, and I just want to have, I just want to educate like the 7,500 clients that I've been working with in real estate over the last 5 years, then like, you might not be so regimented. But like, yeah, for me, it's always like, listen, I want to do something cool in this space. I want to help as many people as possible. And I want to be, a brand and a figure in the space. And so in order to do that, I think you have to be regimented and stick with it. Like I brought, man, like my wife is, bless her soul, but I brought like my recording content pieces on her honeymoon this summer. So like, I brought like my tripod, I brought my podcast.
That sounds right. That sounds about right. Yeah.
Yeah. So like I didn't miss one like video, one podcast. Like it all, the newsletters, they all came out for my 2-week honeymoon.
Yeah. Oh, man, good for you. Yeah. I can only.
And people might think that's kind of psychotic.
No. That I remember when we were starting this business. Nick, do you remember we went to one conference? We could barely afford a marketing conference, and we spent the money to go to this marketing conference. And I think people maybe from the outside think you're more successful or have more money than you have. They didn't realize like we were just barely holding our lives together. We flew home, we packed, we ran some advertisement that got 300 leads where we promised a report that we would put in the mail. And Nick, do you remember we flew home for 2 days and we were going to another conference or something? We came home, we met at my house in the unfinished basement. We're like packing those. I think Nick's wife came, my wife was there, and it was just a pure shit show. You're just like, what are we even doing? But these are the kinds of things you kind of have to do. You have, especially when you're building momentum in a business, it's important to keep consistent to build that momentum. And then, like you said, once you have a brand and some following, it gets a little bit easier.
See what you just said, like it's funny because you're like, we couldn't even really afford it, but like we're going to like these like marketing conferences. And like that's exactly like what I did. Like my first like 2 years in real estate, like I think any business, like you're not really making a whole lot of money, like it's tough. And but like almost like every dollar that I made was like, okay, I'm going to take this and reinvest it into myself. So I'm going to go out and buy like a couple books. I went to like social media conferences, flew to San Diego, took a couple courses. Like I put like almost every dollar back into like myself to try to build those skill sets, which I think stick with you for time. And like, what's the ROI on like $1,000 conference? I guarantee you're getting that $1,000 back and then some.
Jeez. Especially early, like for us, especially early on. Yeah, and maybe after time, after you hear similar, you see a lot of things over and over. I mean, there's still value to it, but early on, man, we were sitting there it opened our eyes to just a world of possibilities we didn't even know existed, just the way those things were run and marketed and stuff. And it changed, at least for me, it changed my perspective on everything. Yeah.
Some stuff we learned that we didn't want to do. There was like, oh, okay, we don't want to do those things, but we want to do these things. It just gives you perspective. It's actually, Nick, what Steve said, and Steve, what you mentioned earlier, when you saw other people kind of getting dunked on who were like hugely successful, and it gave you kind of a perspective of like, oh, if I get dunked on, it's okay. That seems like how the world works. Going to these conferences gave us that type of insight, like, oh, we can do this in a real estate business. Like we can have a newsletter and we can offer education courses, like, oh, this is possible. It kind of, we had to invest in ourselves to be able to, I guess, maybe give us the confidence to do things a little differently or whatever. Anyway, we're all over the map now.
No, it's good. I think the whole like framework is just like, provide value and provide more value than you take in the world. And I think you'll get it all back. Right. So it's always funny because like, like in realtor school, you're taught to like do what everybody else does, which is like mail out a flyer and like promote yourself. It's like, is that really providing any value to anyone? Like, obviously you guys have gone the route of like educating people, helping them, putting courses together. And like, I mean, obviously that's a lot of what I'm trying to do. And it's like, you putting the client and the audience ahead of your own best interest.
Are there some principles that you find that you live by? Now I'm really throwing shit at you. So I kind of I should have prepped you on this, but are there some principles that you just kind of live by? And maybe I'll just give you an idea. For us, it's always been do the right thing. This was like a football coach, by the way. When I was at Oracle, the sales VP played a video of some football coach at Notre Dame, I think, that was teaching the football team on like how to live by principles. And he said, always do the right thing, give 110% and treat others as you would treat yourself. And I remember thinking, hey, those are the principles I want to live by. I'm just going to use those principles for me. And Nick and I, for this business, that's kept us really straight, because we've had a lot of different opportunities over the years to maybe make quote unquote big money really quickly. And we're like, well, is that the right thing to do? And it just allowed us to make decisions really easily. Do you have any principles that you've kind of lived by or choose to live by that you've maybe not even identified, but just having this conversation?
I don't know if I've identified them, but just like, I think my mom kind of raised me to always think about others and do the right thing. So like similar to your point, and I just see the way she actually like built and run her real estate business, which is like actually extremely successful now.
Oh, wow.
Is all based on like relationships, doing the best thing that's for the client, not for yourself. And I always wanted to set my real estate business up where I was doing enough business, or I had enough money in the bank that I didn't feel like I had to like close a sale that wasn't in the best interest of the client. You know what I mean? And sometimes you're like, oh, this is not a good building, you should not buy here. But I'll still see realtors been like, oh, is this fine? Don't worry about it. Like, the roof's caved in and leaking, but like, just get in there because I got to get paid and put food on the table. So I always wanted to make sure like my business was never set up. Like if I gave people honest and good advice, that it would pay dividends many, many years down the road. So that's really kind of how I wanted to set my own business up. So I guess from a principal perspective, I hope that answered your question.
Yeah, no, that's great. I just have a few more questions. Do you have a few more minutes? I'm over.
Yeah, I'm good.
Yeah, is that okay? Okay.
Yeah.
You've kind of gone down the Bitcoin rabbit hole a little bit, right? Have I seen you comment on that? Where did that come from? Was that just studying macroeconomics and understanding that? Like, how did you fall into that?
That's actually a good question. Oh yeah, I had one of my buddies actually introduced it to me like way back in the day, like 2017, I'm gonna say. And he was a real smart guy, and I was like learning finance almost like from him for a little bit. And he's like, you gotta buy this. And I was like, I don't know, man. Like, it's kind of confusing. Like, how do I buy it? I actually ended up accumulating like a decent little position in like 2018. And yeah, just read, that's all it was, like listen to some interviews, try to understand it, because it definitely seems like when you first like grasp, you're like, this is a scam.
Yeah,
totally, what do you mean, like digital tokens that I can't totally. And like, you guys are real estate, I'm like a real estate guy. It's like I need like tangible assets that I can like look and touch and feel. Like, to me that makes a little bit more sense. But like when you actually truly like read and understand Bitcoin, you're like, okay, this makes sense. I think this should be at least a small portion of a portfolio.
Yeah. We said the same. I remember calling it a scam earlier too. Yeah. Anyway, sorry, Nick.
No, I was just curious on this. So the pinned tweet you have is we've. It's funny because I wrote something just over the last couple of days, similar about this same thing. We've printed 23% of our Canadian dollars into existence over the past 18 months. This is the end of last year. During that time, national home prices have inflated 34%. I'm not sure building a few homes can fix monetary imprudence. I like that. Imprudence was a really nice word, but for what it is. But so when you have with that type of comment and mindset, when you have these conversations with your clients, often you said come to you from like YouTube and your blog articles and that type of stuff. And when you're having this type, you're doing some media as well. Are you talking about this stuff, and how do they react to this? Does the average person that you're kind of hanging out with talk about this type of stuff at all? Because in our world, the real estate people we know, when we talk about this type of stuff and how it impacts real estate, no one's talking about it. It's just like, what? I don't really get, it's like the first time they've heard it. And that's why I'm curious. Like, have you found other people? We're looking.
Yeah. Hey, that's a good question. I definitely find like a lot of my clients tend to be finance sort of savvy or interested anyways. Like I definitely work with like a lot of portfolio managers and stuff like that. So they'll get it. But like the average client, there's definitely people that I think are like passionate and learning and they sort of get it. And then there's other people like maybe, I don't know, past client like referred me their friends. And I'm like, okay, I got to dial back. Cause like, talking about the
you don't want to be the
growth.
crazy. You don't want to be the crazy.
Yeah. But like, I mean, yeah, like that was obviously, I think that was like the largest currency devaluation in front of our eyes over the last couple of years. Right. And that was a pretty solid argument to buy like physical hard asset. And so I don't know, it's funny because people are like, oh, this is a supply problem. Like, buddy, this ain't a supply problem. Like, yes, like long term, we do have supply issues, but like house prices don't go up 20+% nationally in the span of 18 months because like all of a sudden there's a supply issue. It's like, no,
in every city.
Yeah. You dropped rates to zero, you printed a whole bunch of money and you mailed people checks and inflated didn't even inflate the asset, right? Like the house didn't get any better. The house didn't get bigger, the lot didn't get any bigger. It's like the purchasing power of that currency just fell.
Yeah. It didn't help that they shut down supply chains too. So to get anything. It was just like the perfect storm of crap.
Well, that's the thing. And then somebody posted like a chart on Twitter like the other day. It was like M2 growth in the US is like now it's basically turned negative on a year-over-year basis, right? And like, well, it's no surprise now, like, house prices, for example, are falling, right? Like, you giveth and then taketh away, right? It's
what do you think? So the two now we'll kind of wrap up after this, but what the two big narratives that I kind of see that I like right now are probably Raoul Pal's narrative of like, hey, economic data is just falling straight down. We're going to see inflation just crumble over the next few months. And the central banks at some point are going to have to do something, either governments fiscally or a monetary change. But then you have the Luke Gromans of the world. And I kind of like his analysis too. I'm not sure if you follow him, but he's basically been hinting, that the central banks have been slightly, or the Fed has been maybe, nobody knows, weaponized a little bit with the energy problem going on in Europe and the war over there. Maybe the Fed's not acting at all, thinking about, the state of the economy at the moment. Maybe it's actually being weaponized to say, hey, energy prices are going to go up and that's being used as a tool of war. Well, we're just going to crash the economy so there's no demand in response, and the US dollar will go up through the roof in value during that time. Do you lean one way? Like if you had to guess which narrative is playing out in front of our eyes, is it a combination of both, either of those? What are your thoughts?
Do you guys subscribe to Luke Groman? His newsletter?
I have, I think he has levels. I think we have his like one level, like the Friday.
I've got that one.
Okay. Yeah, we do. Yes.
Yeah.
Yes.
It's a good read.
It's great. Yeah.
I think, my personal opinion is kind of somewhere in between of like Raul and maybe Luke, which is like, I think, okay. My personal view is I think inflation is going to roll off. And I think it's going to roll off faster than most people think. Just given like debt loads basically. And I think housing is the leading indicator, right? Like it's half of global wealth. It's 50% of household wealth around the world. When that's falling in value, I just think it's a huge, like it takes time for that to filter through. And obviously Canada's like at the pinnacle of that, right? It's everyone's like largest asset. So I think as that's rolling off significantly, inflation is going to come down a lot faster. Like I see it all the time, YouTube comments, Twitter replies, just even telling people the notion that inflation might be rolling over and coming down. People get so hell-bent and upset about that. They're like, you're an idiot. Oil's going to $300 a barrel. People are going to freeze on the streets. I think everyone's just like waiting for the world to end. And I think that we're going to sort things out. And I think that inflation is going to come down faster. I'm not saying it's going to get down to 2%, but like maybe it just comes into a range of 3.5%. And I think that's going to happen sooner than later. It's just because I think the economy is weaker than I think people are maybe anticipating. So that's kind of like my current view. And again, could very well be wrong on that, obviously. But I just think
the year over year comparisons just start to get easy soon too. So you're right. I don't know.
Well, I think that's the biggest misconception. And you asked me about like the general public about like M2 growth, and understanding that is like the common rebuttal I see just talking to people all day online is like, yeah, but prices aren't coming down. It's like, well, they don't need to come down. They just have to stop going up 5, 10%, 8% a year. It's like, as long they just have to flatline, like your food prices or car prices don't even necessarily have to come down for inflation to roll over. So like, it's funny because like look at used car prices in the US. Like they're down like 8%. It's crazy. So I just think, world. Yeah, I mean, we'll see.
Have you read the book, The Fourth Turning?
I read like parts of it. I actually found that book to be, I don't know about you guys. I've listened to a lot of Neil Howe's interviews. I found his book, his writing, to be kind of hard to digest.
Tough. Yeah, tough. I found that book tough too. I just focused on the fourth turning part because like about a few chapters into the book, I'm like, I can't really take it. So his current interviews, you're right. I wasn't resonating with his current interview. I'm like, is this the same guy who wrote the book? There feels like there was something weird for me there. Not sure what it was. If it was the co-author or something, but anyway.
The one thing I'm interested in with Steve, with what you're saying, because I agree with you about the inflation, is just these energy prices. Because it looks like, I mean, you're reading some of the same stuff. After these midterm elections, once they stop, you think they're going to stop kind of draining the strategic petroleum reserve in the US. And are these energy prices going to spike again and just screw up these inflation numbers? Because if that happens, and which messes up the inflation, kind of the headline inflation counts that are getting reported, then are they under pressure to do other ridiculous things that they shouldn't be doing, with interest rates? That's the only wild card I think that's left, because I agree with you everything else. I don't think prices come down. I think they're set here, and inflation really started taking off. When did the numbers really start taking off? It was like the beginning of last year, right? So I think that should settle down a little bit. And then the war started in February, which spiked energy. So that's the only kind of last wild card that I'm just curious to see what really happens with that. It's already started trending up again, even after the last kind of like them trying to get it down. Sorry, I cut you off.
No, I totally agree. I think like that's certainly the wild card. And like I said, I could very, very well be wrong. I just think we're going to figure it out. Like, I don't know. Like I just look at like, I know it's short term, but like, European natural gas prices, which everyone was like talking about it. It's like, well, they like, I think they traded like negative at one point, like last week. And like, cause they filled up all their reserves. Yeah, that's temporary. I'm not an expert on European natural gas, but I just feel like, I just think we as a society, we tend to like figure out and find solutions, and I don't know. So that's kind of my base case. The long story is I don't really have like an answer for you on that. I just think like we're going to figure it out. And
well, if you did have a firm answer, you'd be the only one in the world at this point, I think, because everyone's, I think, scratching their head.
Yeah, I'm just like you guys, like everybody else, man. Just a guy that's trying to figure out the world, and I'm guessing like everybody else. So take it for what you will.
Steve, real pleasure getting to know you better. I can see why people enjoy working with you, why you're, you get the clients that you do, and people reach out to you. Thank you for doing this. If someone's listening to this and they do want to reach out to you, can you share some of your like your Twitter handle, your YouTube channel, the Looney Hour, what you're doing? Can you share a bunch of that stuff just so people are aware?
Yeah. Twitter's at Steve Saretsky, pretty active on there. Looney Hour is like a podcast to do with two other Canadian guests where we basically just talk about it's macro based, but it's definitely touched a lot on Canada. So we do a podcast that comes out every Friday. It's the Looney Hour. Just search it on Spotify or Apple. And then YouTube, I have a weekly Saturday show, which is more like Canadian real estate focused. So that's every Saturday. You can just search Steve Saretsky on YouTube, and best way to reach me, just send me an email if you have questions. Obviously I'm in Vancouver, so I might not be able to help you specifically in the GTA, but if you just have general questions about housing and stuff, I'm always happy to chat.
Cool. Awesome, Steve. Nick, anything else for you?
No, I think that's cool. That the fact that you're even willing to do that by email and stuff, you have a lot going on. So that's generous of you for sure.
Yeah. Steve,
Yeah.
anything we should have asked you that we didn't ask? Who's going to win the cup? Who's going to win the cup? And don't tell me Colorado.
It's going to be a repeat.
Oh,
repeat, baby.
Listen, can we just have the Leafs surprise us one year where they start out like garbage and just win the whole, like just law of averages, stats. Like we must, at some point, we just have to have a year. I don't get it.
So this could be the Leafs year. We need like something to offset this like housing bear market.
Okay.
Yeah.
Hey, I'm buying what you're selling. I'm buying what you're selling. Steve, thank you so much for this, man. Appreciate it. Thank you.
Thanks for having me on.
Thank you. Thank you. Hey, thanks for tuning in. You can find every new episode of the Your Life, Your Term show on all the major streaming platforms. So Spotify, iTunes, Google Play. And if you'd like to get free copies of some of the books that we've put together, like these right here, or some of the reports that we've put together, like these right here, you can find all of those at www.rockstarinnercircle.com. That's www.rockstarinnercircle.com. That's it for now. Until next time, your life, your terms.